Hey traders, Peter here, New Wave Trading. I want to show you guys a system that I've used and another little trick that I learned with volume profile on the ATAS platform, watching one of Anastasia's videos earlier today, which was a replay from yesterday's webinar. Today is December 7, 2024. So as you guys know, my framework is auction market theory. I use volume profile and initial balance during the regular trading session. And I use a lot of, I break down 30-minute profiles intraday on a 30-minute chart, ETH and RTH profile. That's my thing originally. Then I add that in relativity to GEX levels from Menthor Q. Okay, and I line things up before I go into the bookmap order flow, which a lot of you guys have seen my webinar now on Menthor Q, where I help debut how to integrate Menthor Q inside of bookmap. So one of the cool things I learned from Anastasia is if you to build a good composite profile, people tend to want to build composite here on the right. I learned some cool tips and tricks from her, and I just wanted to share that to our community and the users that find us here on our side of the pond that want to really have a little bit of an edge and get the noise off your charts. And one of the cool ways to do that is, in this case of crude oil, for example, I'm going to remove my ETH, RTH, and my IB off of the charts, and I'm going to manually draw a range profile. So let's say in this case, I want to measure this weekly kind of range, right? Now I have this profile, and we all kind of know, most of us know what is high volume nodes, which is most of the peak of all the volume traded versus the smaller areas of low volume nodes. And we could see a lot of price reverse around these areas where price was not accepted and where most of the high volume obviously traded is in what we call HVN, the acronym for high volume node. And of course, then it's followed up with a max level, which is a point of control. Okay, and then in between there, you have your averages of your 70 percentile range of value area high and low. But how can we also intraday take 1, 2, 3, 4, 5, 6, 7 of these trading days and potentially make our own little zones, and then take a little like the noise off the market and identify where most of the volume really did trade in a visualization that you can make simpler. And so in each market is different, and every professional platform is different. But one of the cool things about pro platforms is they have a filter process. And in the filter process, you could do a min-max of volume traded and make a clear order flow visualization of where those main levels really truly were. By doing this, you can create your own boxes and create a composite profile that you can then put global on our next chart that I'm going to show you guys. So in this case, let's say, and you have to finesse each market. In this case, let's say 3,500 is just sufficient. 4,500 is not enough. 2,500 is going to give me too much wide range. So let's say I use even 3,800, and now I have an area where, let's say 3,600, and I have these areas here, this area, this area, and this area. I'm going to draw a box and a little line down here. Now I'm going to use my hotkeys, and I'm going to draw these little zones, that zone, this white zone, this zone, and this little area zone here. Okay, just a little bit there. I'm going to give it some room. Okay, and I'm going to put these on global and lock them. I'll put this on global and lock this. And in a minute here, we're going to go to our gamma chart, which is also our entry chart. It's our 5-minute chart. This is a 30-minute chart. I'm going to delete this, and now I have this. Okay, in this level, you can play mean reversion, because where most of the volume trades is where you have a lot of mean reversion trade. Outside, we want to look for longs coming from the outside in for shorts, and from the bottom for shorts down. Okay? But when I back this up and I take it into a 5-minute chart, and look how beautiful this gets, and it lines up with stuff. Friday and gamma levels on options market. I'm not going to talk too much in detail today about what they are. We had a one-day max on crude oil coming into Friday, December 6, 2024 at 2:30 in the morning. We kept trading a little bit back inside the range and out, so it could have been difficult. But once this market went down and pulled up to the HVL 0DTE one-day max, we completely sold off to the GEX level 5. So you can build this up. And another cool thing about ATAS is like I have a custom cluster chart here for max delta, for the delta. And we can see that we maxed out buyers at this price between 68.25 and 68.35, 10 cents. And we had a divergence in the footprint with sellers coming in and then sellers coming in again and again. And you can see the points of control of each 5-minute chart, 5-minute footprint, 5-minute bar. Okay. Now, some people will wait for a retest of the main point of control of this. Once we had a break, maybe a pullback, some people chase it in. That's up to you. But the rest of the day, you had a nice shorts in crude. Okay? I'm going to run another example on 6E, Euro futures. So what we have here is a multiple session range of the 6E futures. I'm going to do the same thing without using the daily RTH, ETH, and balance areas. I want to get a clear picture of a composite. And so I'm going to draw the range from this area of volume that's all been traded. And now I am looking at a composite profile, but I want to get a better painted picture to draw the boxes I showed you. So I'm going to right click in the settings, at least in the ATAS, and I'm going to go down to the filter. And again, based on the market, it's different. I might need a higher set of volume for this to work. So I'm going to start looking around areas that give me space. So in this case, I think I'm already liking like 11,000. Now why? This is multiple weeks of level. Okay, so this is just another example. What I'm going to do now is I'm going to create, which I saved my hotkey, these ranges. Oh. We'll continue here. And that's about it for now. Remember guys, this is a big wide range, so it's a lot of noise. And delete this, and we'll save these and lock them. So remember, I want GEX changes every day, which is the options derivative space, all the dealer exposure volume. So I just want to look at opportunity coming in now that lines up between these levels, all that volume traded, and inside my GEX levels. Okay, my gamma exposure levels for dealers. And we can see that there was an opportunity here. Now, if you're pretty good with GEX, you could have taken shorts from the call resistance into this level. But once you broke this level, retested, you can clearly even see, though the volume in the history of the last 2 weeks has shown us the high probability this level now has been broken, retested, and is going to be a good short. So what this did for us, not once, but twice, is it gave us room to make 39 ticks, maybe make 39 ticks again, shorts, and then at some point, hitting this put support, you could see it's holding really well to go longs into the day, right back in. So you can pick your own poison. What I'm trying to show is there was multiple times to make in this deviation level here between the GEX and volume, which is basically the auction, 39 ticks, 44 ticks, 39 ticks. And that's one single contract, and it's showing you the figure in dollars. So this is the ways, guys, that you can use this. Now, additionally, I want to also impress upon you footprint traders. So I have the settings. Again, credit to Anastasia. I got these settings from her on the Delta footprint. And every time we came, let's look at the longs. What I heard a lot from Anthony Drager when I was learning at Market Delta 2 on the footprints, he said anytime you want to short, you want to look for a lot of buyers. When you want to go long, you want to look for trapped sellers. And anyways, what happens here is not a trap situation. You had a lot of sellers already coming in with a divergence. You have a delta divergence here. And here actually is your trap buyers that come in and they try to buy above this point of control of this bars. And they failed. And what happens? This market dumps. So on your initiation process, you can see your execution that at a certain level, finding the divergence first and then trap buyers helps fuel the price down to your put support. Now, what do we have at the put support? We have a bunch of selling and guys that are trapped on this side. We have a lot of buying. It comes back down. Okay. What you can look for is the divergence on the selling, the divergence on the top, the selling, and here. This is where the buyers really gave it to the sellers and trapped these guys here. As soon as we closed point of control above these sellers, this thing went long for a scalp. We had another opportunity down here that was very clear and present. So this could have failed and been a stop. Just being realistic with you. And now you have another same case. Sellers coming in trying to break under the put support. Buyers coming in. 30 delta divergence. Lower low. Less delta on the negative delta. You have a 30 delta. 97, 26, 139, 99, 91, 140. And off we go to the races. Right back up for 39 ticks. And this trades at $6.25 a tick. So guys, multiple opportunities using a professional trading platform. The ideas that was shared with from Anastasia on how to make your boxes on the profile on a composite basis. On a composite basis. I'm going to take ES now and I'm going to go back a couple of weeks and I'm going to put it on, I already set it on 25,000 filter. Same thing, guys. I'm going to draw my rectangles, my zones of 25,000 total contracts filtration minimum. Okay. Now in this case, we can clearly see that, again, when we're in this range, we get this back and forth, right? We get this because of the volume so highly traded, it goes mean reversion. And although we bounced out above the call resistance a couple of times in the last couple of sessions, most of the volume came back in and traded and was accepted in this high volume area. Our filters that we use was on that big time frame, 25,000. We could see how price bounced all day, mean reversion, back and forth. So if you're trading this thing on a mean reversion basis, you have 32 ticks potential range within this on a mean reversion. Now, how do you find opportunity on the delta? Well, come into a dive here and you can see the delta shifting in this consolidation from total sellers minus 412, 844, 1K, 444. It diverges and starts converting. The sellers cannot hold this down. The buyers came in, and what do you get normally when sellers are trapped? You get a big move back up to the upside, right back up to call resistance. So this is how you can use it with your gamma levels, and also, of course, you can use Bookmap, but in this case, we're talking ATAS. We're talking the delta footprint, and how this delta footprint can show you divergences in levels where buyers are stepping in, and you can take back in and get in at areas on pullbacks at the point of control of the first big delta change. So it goes up, pulls back, delta shift, entry, pullback entry. Now you're long from, let's say, 60.92 up towards 6100. You know, so these are ideas, guys. What I love about the ATAS platform, you can integrate with API, also the Menthor Q, GEX, and you can do beautiful things with profile trading to combine confluence into your trading. Thank you, everybody.